Okay. Good morning, everybody. Welcome to the August 9th, 2023 edition. Let me get the rope. There we go on the cap down where it's supposed to be of the Premarket Prep session. This is our daily session every day, 8:45 a.m., where we're going over the important news, notes, trade ideas necessary to maintain profitability and also just correctly manage positions here in these crazy markets. We can get the camera focused in. I'll just switch it off myself. But Vivian, good morning. Cheswick, good morning. Alicia, good morning. Benjamin, good morning. Hope all you guys are having a great morning. Coco, good morning. I'm going to switch the stream, or at least my monitor, off of myself because it seems to always be extra blurry when I'm switched onto myself. Camera, can we get this going? This is like deeply disturbing me. That's a little bit better. All right, hopefully it just gets better as we go on here. Maybe it's also dealing with the contrast behind me of the constantly changing background. Maybe we'll switch that up. It didn't have any problem with the previous one, though, so I don't know. Maybe the camera's still a little bit sleepy, but we'll rock with it. We'll roll with it. Hope everybody had a great night's sleep. You had an awesome morning routine. You're ready to dive into what we have going on today. Regardless of whether or not the picture is blurry, the vision is clear. And the vision is to get 1% better each and every day. So make sure you're putting those ones in the chat, signifying your intention to get 1% better. Even if you already put it, go ahead and put an extra one. Can't hurt to aim for 2% today, because 2% is feeling like the minimum today, right? This is feeling, I woke up smiling in my sleep. I was excited to wake up this morning. I didn't sleep my first few alarms, but I was like excited in my sleep, like subconsciously excited. So today is feeling like it's going to be a great day here. And I'm excited to tackle it head on here. So make sure you throw another one in the chat and just get ready to receive, ready to execute, ready to, win. So pushing into our top news here, Charge It. It was only 2 months ago that the Wall Street Breakfast Put It on Plastic discussed the $1 trillion U.S. credit card debt milestone, but it has now finally happened. Balances topped the record in Q2 as consumers continued to spend, according to the New York Fed's quarterly report on household debt and credit. The number of credit card accounts has also increased by 5.48 million to 578.35 million, while the total limits on credit card accounts rose by 9 billion to a total of 4.6 trillion. So as mentioned previously, high inflation is pushing more consumers to put non-discretionary spending on cards, while others may be having a harder time paring back their lifestyles despite the price pressures. Interest rates are compounding the issue, with the average annual percentage rate over 20%, making it a costly debt for consumers. It's also higher than at any point since the Fed started tracking card APRs in 1994. Contributing to the overall U.S. household debt that topped $17 trillion in Q1. Meanwhile, the flow into serious delinquency, that is 90 days or more delinquent for credit cards, rose to 5.08% of total credit card balances in Q2 from 3.35% in Q1. However, that figure is normalized with pre-COVID levels, as during the pandemic, changes in buying patterns, fiscal stimulus, and forbearance programs kept delinquency rates low. Credit card issuers will also report their July delinquency and net charge-off rates next week to get a better view on the industry. So, quote, despite the many headwinds American consumers have faced over the last year, higher interest rates, post-pandemic inflationary pressures, and the recent banking failures, there is little evidence of widespread financial distress for consumers, New York Fed economists and researchers wrote following the release. Now, seeking out the commentary, quote, non-revolving credits are just such as personal loans and vehicle loans, has seen a slowdown over recent months, added ING Economic and Financial Analysis. Quote, moreover, the latest Federal Reserve Senior Loan Officer Opinion Survey showed banks increasingly unwilling to make consumer loans. Looking at individual stocks, investors can also discover the latest Seeking Alpha analysis on credit card players such as Visa, ticker V, MasterCard, MA, American Express, AXP, Capital One, CUF, Discover, DFS, and Synchrony Financial, which is SYF. So mounting consumer, credit card debt is something that I talked about to start this year. Throw a 2 in the chat if you ever remember that coming into the year, about how, I was discussing just how people were putting more and more of their lives onto credit. With savings kind of being depleted and inflation on the rise, even though inflation is coming back down, a lot of people are still kind of at that point where they might have run through whatever cushion they had, and now they're using credit as the cushion. And it's different for every person, right? Some people are just doing it because they can't seem to adjust their lifestyles. Some people, got used to that PPP money, that stimmy money, and they just haven't adjusted to the post-stimulus life. And that's the reason, but for a variety of reasons, right? And it's not all bad. Some people are, using credit to build businesses, which is amazing, right? OPM, other people's money. It's a great resource. I'm looking to leverage that exact same thing, right? As I kind of foray into other asset classes after building myself an established base in the stock market. OPM is something that all wealthy people use. So credit isn't a bad thing. Just make sure you're being responsible with it. Is this something that starts to affect the market? We'll have to wait and see, right? That has been the kind of philosophy the whole time. It's like, okay, if we really start to see a major increase in credit delinquency rates, then that might start to affect these banks and some major tickers. Again, it wouldn't really affect the large banks because they have such large cash reserves. Like, they were planning on this happening. They planned in advance, so they're ready for it. It's really the small to middle-sized banks that can struggle. And we actually talked some about that during yesterday's session about how those are the banks that, have received downgrades. So it's really the small and mid-sized banks where they can start to shaking their boots. In terms of global news, national security, Sino-U.S. tensions continue to escalate with plans from the Biden administration to issue new restrictions on American investments in certain advanced industries in China. While the U.S. will say they are necessary to protect national security, Beijing is likely to cite this as another instance of politicizing and weaponizing trade and tech issues. The measures set to be announced today would bar private equity and venture capital firms from making investments in sectors like advanced semiconductors, artificial intelligence, and quantum computing, as well as implement new reporting standards. So at this point, the U.S. knows what it is. Everybody knows what it is. AI has completely changed the game, right? We're living in a different world, a different space, under different circumstances. And, it's come to like a life or death point, right? At this point, with the advancement of these chips, semiconductors, AI, this is one of those things where everybody wants to be the first to master it, and they don't want other countries with morals that aren't aligned with ours to catch up. And I really don't blame them, right? Like, I don't really want, it's not like the United States is scot-free, but I really don't want China and Russia with access to high-tech artificial intelligence. That just seems like something that's not good for everybody, right? So I don't blame it. And it looks like the U.S. is very, very adamant about this, because they're saying, hey, we don't care who you are, how much money you have, you cannot invest into these areas in China. Because I'm sure, that's what a lot of people are sitting here thinking about. They know that the Chinese will pay out the wazoo to get advanced AI. They know that they're trying to keep up with the U.S. So it's a large opportunity, but the U.S. is like, look, not on our watch. Is it still possible to do it? Probably, right? We know wealthy people will do what wealthy people want to do. So you can get around it at the end of the day if you really want to. So I don't really see it as being anything more than kind of like political jargon, but I do think that it's important that, again, we're seeing further escalation, right? These tensions just escalate between the U.S. and China. And, it's just seeming like, again, the war bells are sort of ringing. It's something that no one wants, no one hopes for. But at the end of the day, you also can't be an ostrich and stick your head in the sand here, because our relations with China are the worst that they have ever been. Now, sports, over under, we're talking bets here. Disney's ESPN is moving firmly into sports betting, entering a deal with Penn Entertainment, ticker PENN, for an ESPN branded sports book. ESPN Bet will launch in the U.S. this fall in the heat of the college and pro football seasons, and Penn will divest the Barstool Sports blog back to its founder, David Portnoy, in exchange for restrictive covenants. Penn jumped 30% after hours on Tuesday once the deal was announced, while sports betting competitors like DraftKings moved lower. The street is also weighing in on the news, with Bank of America seeing a constructive risk-reward rationale, and Wells Fargo saying it's too early to conclude that the pact is a game changer. What's really funny is that I shouted out Penn for the inverse head and shoulders that it had on the weekly, I believe on Monday in our Loom videos. So that's just so funny, because I'm telling you, like, it happens, right? Luck is when preparation meets opportunity. If you look, Tiffany said, "Yep." Like I talked about Penn in the Loom video and how Penn looked good, ready to rock it. Now Penn is up 30%. And when we talk about luck being preparation meeting opportunity, when you take the time to prepare, read the charts, identify stocks that have good outlooks and have great looking charts, you can get lucky, right? So it's not like luck has a formula, right? Luck has a formula, but it involves putting in work on your side. So I wasn't in Penn. I'm not going to pretend like I was in Penn, but that was something that was mentioned, right? And if somebody took the early leap on Penn, congratulations. But it's just one of those things where, again, it serves to underscore the purpose that you got to make sure that you are locked in and prepared for opportunity to find you. Opportunity meets you in motion, not sitting still. So if it's taking that extra 5 minutes, 10 minutes, 15 minutes to look through charts in the morning, look through charts at night, set alerts, peek out, scope out potential opportunities, do it, right? Because it can be something that pays heavily when luck finds you based off of you taking advantage of the opportunities available. So moving on in financials, we bust. Trouble is piling up for WeWork, ticker WE, after the co-working office space provider raised substantial doubt about its ability to continue as a going concern. Oh, just continue as a whole. I thought it was like continue maybe a specific portion of the business, but it's just to continue. Yeah, I'd say that's concerning. If someone said, "Hey, I've got substantial doubt about my ability to survive," yeah. The company also reported Q2 results that showed shrinking liquidity and higher member churn, prompting shares to tumble more than 24%. It's not a good sign as the development comes nearly 3 months after the surprise exit of the company's CEO and CFO. Yeah, that's typically not a good sign when you have the top brass running for the door. WeWork recently issued $175 million in notes to SoftBank and an unnamed third-party investor. While seeking alpha analyst Pacifica Yield said the move would extend WeWork's cash runway. Its burn profile remained concerning. In terms of today's markets, we got a mixed bag, but mostly green. In Asia, Japan down 0.4, Hong Kong up 0.2, China down 0.5, India up 0.2. The FTSE in London up 0.8, Paris up 1.2%, Frankfurt up 1.1%, the Dow up 0.1%, S&P up 0.2, NASDAQ up 0.2, crude up 0.6, gold down 0.1, Bitcoin up 1.8%. And then today's economic calendar, nothing too important that we got going on. So we'll finish up with our rapid fire bullet point rundown, as well as some things that I'm watching going into today. So what else is happening? Holiday sales grab, Amazon planned shopping event in October. Of course, they want all your monies, all your coins. Lyft hikes guidance after pointing to strong demand trends. Bulls versus Bears, can the magic reappear for Disney stock? SEC charges 11 more Wall Street companies with messaging probe. Meta faces fine in Norway over advertising privacy violations. Hanes brand, ticker HBI, pushes back after activist investor calls for change. Weight loss drug frenzy, Eli Lilly reaches new all-time high. Talked about Lilly, right? The Michael Jordan of, at this point, the Michael Jordan of what am I trying to say? Like healthcare companies, right? They absolutely rocketed for their earnings. Not as surprising at all, just a rock star company. Super Microcomputer, ticker SMCI, slumps despite earnings beat. Revving up, Rivian boosts vehicle delivery guidance. Google, ticker Goog, working on licensing deal for AI deepfake songs. So I saw that Google is basically working on a licensing deal with Universal Music Group, which is pretty crazy. But basically just, AI taking another step, right? Just as the next big thing, the next hot thing, Universal Music Group is going to take even more from these artists and return to them even less, if I had to guess, because that's just how the music industry goes, unfortunately. The talent is just pimped out, and now you can get even more out of signing an artist. Like imagine they sign an artist, and they really have predatory deals in the music industry, but they put even more dollar signs in front of them to, have their digital likeness for life, or for maybe the first 10 years of their career, or the first 5 years, or the first 5 albums. Like that's crazy. You're literally kind of signing over your soul. And I'm sure a lot of people will come to regret it, because at the end of the day, I don't know what you could be doing with my likeness. And I don't want me going on singing a song, supporting something that I don't support, right? It's a very tough touch and go time that we're living in. So, we'll see who ends up taking those deals. But just read the fine print, right? Read your contracts, people. That's always very important. In terms of, kind of looks that we're looking at today, something that I was looking at yesterday and I liked heading into close and looked at more after close was coin. So coin, I do like. They went and broke the daily downtrend that they've been stuck in for a while. Very steep daily downtrend. So I like coin calls here this morning to check out. And yeah, that hourly downtrend break, daily downtrend break, we know that that's a very important thing to keep track of. And coin broke above its hourly high yesterday, held that into close, and also broke daily downtrend. So coin is looking bullish here as we head into this morning's open. I also talked about Apple yesterday. Apple reached strong support 2 days ago, right? Called that out, that 177.35 support. Apple can bounce from there. It started manifesting some strength yesterday into close. It gapped up over our hourly resistance at 179.84. So Apple was something else that can start to see moves to the upside. I said I was, bullish overnight, leaning bullish into the swings today. I still feel that way. Whether or not that will be maintained, we'll have to look and see. But I do think that we can see some bullish movement today, especially if looking at SPY can hold over this 449 area on the hourly, 449.19 to 449 area. That's where the hourly downtrend is. So right now we're testing that, and we're actually pushing over. We pushed over at pre-market. Does that mean we hold over it? No. But we need to really stay over that area. And of course, the details will go to all my people in the Stock Options Made Easy subscription group in the Facebook group. You'll get all the specific call outs, all that great stuff. But just laying the groundwork here before I go in and create the Loom video so we know what we're looking at this morning, what we're paying attention to. Apple on the docket, coin on the docket, and then SPY over the level that I just pointed out. I like as well. So with that being said, let's have another great day, people. Make sure if you know somebody that's out here throwing their money down the toilet in markets, they need to learn what the heck they're doing. They go to adamhollandeducates.com and use code MyTurn for our largest sale ever, right? Friends don't let friends stay broke. Don't let your friends keep going out throwing money into penny stocks that daggone well are going to take off. Show them how to trade blue chips with impunity, how to do things like short Apple for over 600% profit like we did last week when I called out the rising wedge on Apple, right? All of those things that you see us do regularly, you want to go ahead and make sure that other people are aware of that knowledge. So tell your friends, tell your mom, tell your dad, because we don't do sales often. But for the birth month, I want to show out, and I'm trying to go hard going into the end of this year, spreading the good word to as many people that will listen with free content, reels, shorts, lives. We're doing master classes every few months, right? Just getting it out there. Let's be a part of shifting the paradigm together where finance is concerned, because people got record credit card debt and there's a way they could be paying it off. They could be putting that money to work for them in markets. So let's make sure that they're aware of that. And then we go out and put our best foot forward today, right? So everybody have a great rest of the day. Let's make some money. See you back here tomorrow morning for our next Premarket Prep session. Peace, people.